China just moved $8 trillion. $8 trillion. To put that staggering number in perspective, that represents more money than the entire gross domestic product of Germany, the fourth largest economy in the world. It's more than Japan's entire annual economic output. It's more than the combined GDP of every single country across the entire African continent. And they move this unprecedented amount of money in a way that will systematically destroy Western financial markets. This isn't speculation or fear-mongering. This isn't about what might happen or what could potentially occur. This is about what will happen, based on ironclad historical patterns that have played out with mathematical precision 3 separate times in recorded economic history. Same strategic sequence, same methodical stages, same devastating outcome every single time, without exception, without mercy, without any possibility of avoiding the predetermined conclusion. In the last 24 months, while Western economists and financial media were focused on inflation, interest rates, and stock market volatility, China has quietly, systematically restructured $8 trillion of foreign assets, currency reserves, trade agreements, and economic relationships in a coordinated strategy that only makes complete sense if they're preparing for total economic warfare against the Western financial system. The Western establishment thinks this is normal financial maneuvering, just another example of China being China, just another economic headline that doesn't fundamentally matter. They're treating this like routine portfolio management or standard sovereign wealth fund rebalancing. They're catastrophically, dangerously wrong. Because there's a 4-stage pattern that plays out every time a rising economic power challenges an established financial empire. It's played out consistently for centuries across different continents, across completely different civilizations and technological eras. And we're not at stage 1 anymore. We're not at stage 2. We're deep into stage 3, the critical point where the collision becomes mathematically inevitable. By the end of this analysis, you'll see exactly what's happening behind the scenes. You'll understand why every Western investor who does not recognize this pattern is about to lose everything they've worked to build. And you'll know exactly when the final collapse will be triggered. Let me show you the pattern that they don't teach in economics classes at Harvard or Wharton. The pattern that's been systematically erased from history textbooks because the implications are too dangerous for public consumption. 4 stages, always occurring in the exact same sequence, always producing the same devastating ending. Stage 1 is what economists call the foundation of dual dependency. This is the honeymoon phase where 2 economic powers become deeply, seemingly, permanently intertwined. Trade flows between the nations become absolutely massive, creating the illusion of mutual benefit and shared prosperity. Each side genuinely believes they need the other for continued economic success. Academic economists write optimistic papers about how interconnected the modern world has become, how global trade has made military conflict impossible because of economic interdependence. Money flows freely across borders like a river. Goods move constantly in both directions. Both nations get incredibly rich from the relationship. Politicians give enthusiastic speeches about partnership, cooperation, and shared prosperity. Everyone's happy with the arrangement. Everyone believes it's permanent and mutually beneficial. Everyone thinks the good times will continue forever. They never do. Stage 2 is the asymmetric accumulation phase. One side starts systematically accumulating strategic advantages, while the other side grows complacent and overconfident. Surplus nations begin building massive financial reserves, stockpiling gold, accumulating foreign currency holdings, and developing alternative economic relationships. Deficit nations simultaneously build massive debt burdens, become dependent on foreign financing, and lose manufacturing capacity. Power shifts quietly, slowly, almost invisibly at first. The rising power is saving money, building infrastructure, preparing for future economic competition. The dominant power is spending beyond its means, borrowing against future growth, and assuming that current advantages will continue indefinitely. This continues until suddenly the shift becomes obvious, until suddenly the economic power has already fundamentally changed, until suddenly it's mathematically too late to reverse the process. Stage 3 is the strategic repositioning phase. This is where we are right now with China and the United States. The rising power realizes they've accumulated enough economic leverage to challenge the established system. They start systematically restructuring their international relationships, diversifying away from dependency on the dominant power, building alternative financial systems, and preparing for complete economic separation. They execute this repositioning quietly, without public announcements, without press conferences, without diplomatic warnings, while carefully maintaining the surface appearance of cooperation and partnership. They continue smiling at international meetings, signing trade agreements, and participating in existing financial institutions. Behind the scenes, they're methodically preparing for economic warfare. Not military war, which is expensive and unpredictable. Economic war, which is surgical, devastating, and virtually impossible to defend against. Stage 4 is the controlled demolition. The rising power triggers the collapse deliberately, not accidentally, not as an unintended side effect of other policies. They weaponize the economic dependency they spent decades carefully building and cultivating. They use financial force to achieve geopolitical objectives without firing a single shot, without losing a single soldier, without violating international law. The established empire discovers they can't respond effectively. They're trapped by their own massive debt burdens, by their own consumer expectations, by their own political system, and most importantly, by their own arrogance and complacency. They collapse economically, not militarily, which is infinitely worse because you can't fight back against mathematics. You can't deploy aircraft carriers against supply chain disruption. You can't bomb your way out of currency collapse. You can only watch helplessly. You can only suffer the consequences. You can only accept the new reality. This exact pattern has played out 3 times in modern economic history with identical results. Same sequence, same stages, same devastating outcome for the established power. Let me walk you through each historical example because the details matter crucially, the timing matters, the sequence matters, and the parallels to our current situation are absolutely terrifying. The first historical example of this pattern occurred between England and Germany from 1900 to 1914. At the turn of the 20th century, England was the undisputed global superpower, the dominant economic and military force that controlled world affairs. The British Empire controlled approximately 1/4 of the entire planet's landmass and population. The pound sterling was the world's unquestioned reserve currency, meaning every major international trade transaction was conducted in British pounds. London was the absolute center of global finance, where capital flowed from around the world seeking investment opportunities. Every major bank, insurance company, and trading house maintained offices in the City of London. British naval power protected global shipping lanes. British merchants dominated international commerce. Britain seemed invincible, permanent, and eternal to contemporary observers. Germany, meanwhile, was rising fast as an industrial powerhouse, rapidly mechanizing their economy, building manufacturing capacity that increasingly rivaled Britain's legendary production capabilities. German engineers were developing advanced steel production, chemical manufacturing, and precision machinery that competed directly with British products in international markets. Germany was accumulating wealth systematically, growing stronger economically and militarily every year, positioning themselves as a potential rival to British dominance. Stage 1 was locked in perfectly. Both countries were trading heavily with each other, creating massive commercial ties that generated enormous wealth for both economies. The economic relationship seemed permanent, mutually beneficial, and completely unbreakable to political leaders and business communities. British newspapers regularly wrote optimistic articles about the age of eternal peace through commercial cooperation. Politicians from both countries gave confident speeches about how the deep economic ties between Britain and Germany made military conflict absolutely impossible. They argued that both economies were so interdependent that war would destroy both nations financially. They believed that rational economic self-interest would prevent any serious political conflict from escalating into actual warfare. They were catastrophically, dangerously wrong. Then, between 1900 and 1910, Germany made a series of strategic decisions that fundamentally altered the balance of economic power. They systematically restructured their entire foreign reserve strategy, making moves that only make sense in retrospect when you understand the pattern. They reduced their British pound holdings by 60%, 60%. That's not a minor portfolio adjustment or routine financial management. That represents a fundamental repositioning that signals preparation for economic conflict. Instead of holding pounds, Germany began accumulating gold on a massive scale. Thousands upon thousands of tons of physical gold, building the largest gold reserve anywhere in continental Europe. Gold doesn't pay dividends or interest like government bonds, so this represented a deliberate sacrifice of immediate returns in favor of long-term strategic positioning. They were preparing for a world where British currency might become worthless. Simultaneously, Germany aggressively built new trade relationships with Russia, Austria, Hungary, and the Ottoman Empire, creating an alternative economic sphere that bypassed British financial control entirely. They were building a parallel economic structure, an alternative system that could function independently of British markets, British currency, and British financial institutions. The British government and financial establishment didn't notice these fundamental changes. They were too confident in their global dominance, too comfortable with their historical advantages, and too arrogant to recognize the strategic threat being systematically constructed. Stage 2 was confirmed. Asymmetric accumulation was in full effect, with economic power shifting beneath the surface while the British remained oblivious to the changing dynamics. By 1912, the situation became much darker and more ominous. German bankers were openly discussing financial warfare strategies in private meetings that we now have detailed records of. They were actively planning how to weaponize gold flows to destabilize the British financial system. They were developing strategies for how to trigger bank runs in London that could collapse sterling currency without firing a single military shot. We have the actual documents from these planning sessions, the detailed minutes from high-level banking conferences held in Berlin, private correspondence between German financial officials and government ministers, strategy papers from the Imperial Treasury that outlined specific plans for economic warfare. These weren't theoretical discussions or academic exercises. They were developing actual operational plans for economic warfare 2 full years before military conflict started. 2 years of detailed preparation, 2 years of systematic positioning, 2 years of building economic weapons designed to destroy British financial dominance. Stage 3 was verified and completed. Strategic repositioning was finished, and the economic trap was set and ready to spring. August 1914 marked the beginning of World War I. Everyone focuses on the dramatic military aspects of the conflict. The trench warfare, the massive battles, the millions of soldiers fighting across European battlefields. They completely miss what happened financially behind the scenes, which was arguably more important than the military campaigns. Germany immediately froze all British assets held in German banks, effectively confiscating billions of dollars worth of British investments overnight. They recalled all German gold reserves that had been stored in London, triggering a massive liquidity crisis that threatened the entire British banking system. The Bank of England, the most powerful financial institution in the world, nearly collapsed during the first week of the war. Not from military bombing or battlefield defeats, but from bank runs, financial contagion, and the economic weapon that Germany had been systematically building for years. Britain was forced to suspend gold convertibility of the pound just to prevent complete financial collapse. They had to abandon the very monetary system that had made them a global superpower. They had to beg the United States for emergency loans to maintain basic government operations. Within a matter of weeks, British economic dominance was shattered completely. The pound sterling never recovered its position as the world's dominant reserve currency. Within 30 years, the US dollar had replaced it as the global standard for international trade. Stage 4 was delivered exactly as planned, the pattern completed with mathematical precision, exactly as the German financial strategists had designed and executed. Now, watch the exact same pattern unfold on an even larger scale, with different players but identical strategic sequence. The second historical example occurred between America and Japan from 1950 to 1990, demonstrating that this pattern transcends specific countries, cultures, or time periods. Post-World War II, America rebuilt Japan as part of a broader strategy to contain Soviet influence in Asia. The United States made Japan into a major trading partner, an economic ally, creating what appeared to be a perfect relationship based on mutual benefit and shared prosperity. America received access to cheap manufactured goods, electronics, automobiles, and textiles produced by highly skilled Japanese workers. Japan gained access to American consumers and American capital markets, allowing their economy to grow at unprecedented rates. Both sides prospered enormously from this arrangement. Stage 1 was perfectly established. Deep economic interdependence, massive trade flows, mutual benefit, with everyone convinced they were winning. American consumers loved Japanese products for their quality and affordability. Japanese manufacturers loved American demand for their exports. Politicians and economists in both countries praised the relationship as a model for global economic cooperation. But starting around 1960, something fundamental began to change in ways that were subtle at first, almost invisible to casual observers. Japan began systematically accumulating US dollars, not just earning them through normal trade operations, but accumulating them on a massive scale as a deliberate strategy. By 1985, Japan held over $300 billion in US currency reserves and treasury bonds. $300 billion represented an enormous amount of economic leverage over American financial markets. But they weren't stopping with currency accumulation. Japanese companies and investors began systematically purchasing American real estate assets, including iconic properties that symbolized American economic power. They bought Rockefeller Center in New York City, the most prestigious commercial real estate in America. They purchased Pebble Beach Golf Course in California, one of the most exclusive recreational properties in the country. They acquired major hotels, office buildings, and entire neighborhoods in cities like Los Angeles and Honolulu. Japanese corporations simultaneously began buying American companies, acquiring advanced technology, and hiring the best American talent in key industries. The dollars that Americans spent on Japanese products were being reinvested to buy American assets, creating a systematic transfer of ownership from American to Japanese control. By 1985, Japan controlled nearly 40% of Hawaii's real estate market and owned substantial portions of California's commercial property. They had effectively colonized entire sections of the American economy without firing a shot or sending a single soldier. American politicians and business leaders were so focused on the benefits of trade that they completely missed the strategic implications of this systematic asset acquisition. Stage 2 was confirmed. Asymmetric accumulation was occurring on an unprecedented scale, with Japan building massive leverage over the American economy, while America accumulated nothing but consumer goods and debt. The power balance was shifting dramatically, but American leadership was too complacent and overconfident to recognize the pattern. Then came stage 3, strategic repositioning. In the late 1980s, Japan began diversifying away from dollar dependency and building alternative economic relationships. They increased trade with Southeast Asia, developed stronger ties with European markets, and started creating financial institutions that competed directly with American banks and investment firms. Japanese companies began challenging American technological dominance in semiconductors, automobiles, consumer electronics, and advanced manufacturing. They were systematically replacing American companies in global markets while using profits generated from American consumers to fund this expansion. They were turning America's own economic success against America itself. The trigger for Stage 4 came with the Plaza Accord in 1985, but not in the way most economists understand. The conventional narrative claims that American pressure forced Japan to appreciate the yen, which hurt Japanese exports and ended their economic challenge. That's completely backwards. Japan used the Plaza Accord as cover to trigger a controlled demolition of the American manufacturing sector. When the yen strengthened, Japanese companies didn't reduce their competitiveness. They accelerated their acquisition of American assets, technology, and production facilities. Strong yen made American assets cheaper for Japanese buyers, allowing them to purchase even more of the American economy. They systematically moved production offshore, hollowing out American manufacturing while maintaining control of the value chain. The result was the complete destruction of American industrial capacity in sector after sector. Steel production, automobile manufacturing, consumer electronics, machine tools. Industry after industry was either eliminated or transferred to Japanese control. Entire American cities built around manufacturing became economic disaster zones. The Rust Belt was created not by technological change, but by systematic economic warfare using the 4-stage pattern. Now, in 2024, we're watching China execute the exact same strategy, but on a scale that makes Japan's challenge look minor by comparison. China has spent the last 30 years accumulating not just dollars, but control over global supply chains, critical resources, and advanced technologies that America depends on for basic economic functioning. China currently holds over $3 trillion in foreign reserves, compared to Japan's peak of $300 billion. They control the manufacturing of everything from smartphones to pharmaceuticals to military equipment that America considers essential. They've built alternative financial systems, including the digital yuan and the Belt and Road Initiative, that bypass American financial institutions entirely. Most critically, China has been systematically reducing their exposure to American markets while increasing America's dependency on Chinese production. This is Stage 3 in action. Strategic repositioning designed to maximize Chinese leverage while minimizing Chinese vulnerability. They're preparing for economic separation while making separation catastrophic for America. The $8 trillion move represents the completion of this repositioning. China has diversified their reserves away from dollar-dominated assets, built alternative trading relationships with dozens of countries, and developed the financial infrastructure necessary to function independently of the American system. They've spent decades building economic weapons designed specifically to collapse American financial dominance. Just like Germany in 1912 and Japan in 1985, China has been preparing for economic warfare while maintaining the appearance of cooperation and mutual benefit. They've been building the leverage necessary to trigger Stage 4, the controlled demolition of American economic power. The evidence that China has completed Stage 3 preparation is overwhelming and undeniable to anyone willing to examine the data objectively. But Western political and financial leaders are making the same fatal mistake as their British counterparts in 1912 and American leaders in 1985. They're dismissing systematic strategic repositioning as routine economic management. First, let's examine China's systematic reduction of dollar dependency, which mirrors Germany's reduction of pound holdings before World War I. Over the past 5 years, China has reduced their holdings of U.S. Treasury bonds from over $1 trillion to approximately $800 billion. That represents a $200 billion reduction in America's most important creditor relationship. But the reduction in Treasury holdings is just the tip of the iceberg. China has simultaneously diversified their entire foreign reserve portfolio away from dollar-dominated assets. They've increased their gold reserves by over 60% since 2018. accumulating more physical gold than any other country in the world. They've established currency swap agreements with over 40 countries, allowing trade to bypass the dollar system entirely. Most significantly, China has built a parallel international payment system called CIPS, the Cross-Border Interbank Payment System, that competes directly with SWIFT, the American-controlled network that processes international financial transactions. Over 1,000 banks in more than 100 countries now use CIPS for international payments, creating a functional alternative to American financial infrastructure. Second, examine China's development of alternative trading relationships that reduce dependency on American markets and consumers. The Belt and Road Initiative represents the largest infrastructure investment program in human history, connecting over 60 countries through Chinese-financed roads, railways, ports, and communication networks. This isn't just about building infrastructure, it's about creating economic relationships that bypass American influence entirely. China has become the largest trading partner for more than 120 countries worldwide, more than double the number of countries that consider America their primary trading partner. They've systematically replaced American companies in markets across Africa, Asia, and South America using a combination of lower prices, better financing terms, and political arrangements that American companies can't match. Third, analyze China's accumulation of strategic leverage over critical American vulnerabilities. China controls the global supply chain for rare earth elements, which are essential for manufacturing everything from smartphones to military equipment. They process over 80% of the world's rare earth materials, giving them the ability to shut down American technology production virtually overnight. China manufactures over 90% of the active pharmaceutical ingredients used in American prescription medications. They control the production of critical components for American military systems, from semiconductors to advanced composites. They've systematically positioned themselves to hold American economic activity hostage by controlling inputs that can't be quickly replaced. Fourth, consider China's development of financial weapons that can trigger immediate economic disruption. The digital yuan is now functional and being tested internationally, representing the first credible alternative to dollar dominance in international trade. When China decides to mandate digital yuan usage for commodity purchases, countries will have no choice but to abandon dollar transactions. Chinese financial institutions have grown to rival American banks in international markets. The Industrial and Commercial Bank of China is now larger than any American bank by total assets. Chinese sovereign wealth funds control trillions of dollars in global investments, giving them the ability to trigger market disruptions by coordinating sell-offs. But here's where Western analysis becomes dangerously delusional. American political and financial leaders tell themselves three comforting lies that prevent them from recognizing the pattern and preparing for stage 4. Lie number 1. China needs America more than America needs China. This delusion ignores the fundamental reality of trade dependency. America imports over $500 billion worth of Chinese goods annually, representing products that American consumers and businesses consider essential. China exports less than $200 billion to America, representing products that China can easily sell to other countries. When trade disruption occurs, Americans face immediate shortages of everything, from electronics to pharmaceuticals to basic consumer goods. Chinese producers face temporary market disruption that they can offset by selling to European, African, and Asian customers who are eager to replace American demand. Lie number 2. The dollar system is too entrenched to be replaced. This ignores the rapidly accelerating trend toward dollar alternatives in international trade. Russia and China already conduct bilateral trade in their own currencies. India and Iran trade oil in rupees. The European Union is developing mechanisms to bypass dollar transactions entirely. Central banks worldwide are reducing their dollar reserves and increasing their gold holdings at the fastest rate in 50 years. They're not doing this because they hate America. They're doing this because they recognize that dollar dominance is ending, and they need alternatives ready before the collapse occurs. Lie number 3. America can respond effectively to Chinese economic warfare. This represents the most dangerous delusion of all, because it prevents serious preparation for the coming crisis. American response capabilities are fundamentally constrained by dependencies that China has spent decades creating. Look at what happened when Russia cut natural gas supplies to Europe. Could European countries respond effectively by quickly replacing Russian energy? No. They couldn't rebuild energy infrastructure fast enough. They couldn't find alternative suppliers immediately. They couldn't reduce their energy consumption without destroying their economies. They just suffered economic contraction and social disruption for years while slowly building alternatives. America faces the same problem with Chinese dependencies, but on a much larger scale. If China triggers stage 4 tomorrow by cutting off supply chains, restricting rare earth exports, and dumping dollar assets simultaneously, can America replace Chinese manufacturing quickly? The answer is absolutely not. Not in months, not in years, possibly not in a decade. Semiconductor fabrication facilities take 3 to 5 years to build and require specialized expertise that does not exist in America anymore. Pharmaceutical production facilities require years of regulatory approval and supply chain development. Rare earth processing requires environmental permits and technological capabilities that America abandoned decades ago. Military power doesn't help when the problem is supply chain disruption. You can't bomb your way out of a semiconductor shortage. Technology doesn't help when the semiconductors are manufactured in Taiwan, and China controls Taiwan's economic options through trade dependency. Economic power doesn't help when your economy is built on debt and your creditor is your adversary. The response time is too slow, the dependency is too deep, the leverage is too asymmetric. The pattern is unstoppable because Stage 3 preparation is complete and Stage 4 triggers are in place. Here's the reality that nobody in Washington, Wall Street, or Western academic institutions wants to acknowledge publicly. Stage 4 is coming, not might come, not could potentially happen, will definitely occur. The pattern is mathematically absolute. The historical sequence is utterly inevitable. The systematic preparations are completely finished. China is positioned perfectly for economic warfare. America is maximally vulnerable to systematic disruption. The timeline has been set through Chinese internal directives and policy documents that Western intelligence agencies are aware of, but choose to ignore or misinterpret. 2026. Remember that date, because it represents when everything changes fundamentally. Chinese government directives have mandated complete strategic repositioning by 2026, including full implementation of digital yuan for international trade, completion of alternative supply chain networks, and finalization of dollar divestment programs. Every day that passes, China accumulates more leverage over American vulnerabilities, builds stronger alternative relationships with American allies, and strengthens their preparations for economic separation. Every day, America adds more debt to an already unsustainable burden, deepens existing dependencies on Chinese manufacturing and resources, loses additional manufacturing capacity to offshore competition, and becomes more systemically vulnerable to supply chain disruption. This continues until the precise moment when Chinese leadership decides that their leverage is sufficient, their alternatives are fully functional, and their timing is strategically optimal. Then they'll trigger Stage 4, and Western financial markets will experience controlled demolition, not might collapse, or could potentially face disruption. Will systematically collapse according to mathematical certainty based on 3 identical historical examples with identical outcomes. So what do you do? How do you prepare for economic warfare? How do you position your investments and financial assets? How do you survive what's coming and potentially profit from inevitable disruption? First, understand the timeline clearly and plan accordingly. Chinese internal documents indicate completion of strategic repositioning by 2026. That represents your maximum window for preparation. The trigger could come earlier if geopolitical events accelerate the timeline, such as conflict over Taiwan or major diplomatic confrontation. It could come slightly later if China needs additional preparation time for specific technical systems. But that's the general range. Maximum danger period extends from now through late 2026. Second, systematically reduce your exposure to assets that depend fundamentally on Chinese manufacturing, Chinese cooperation, or dollar dominance in international trade. Most Western stocks are dangerously exposed because their supply chains run through Chinese manufacturers. Most government and corporate bonds are exposed because China holds massive amounts of dollar-denominated debt that they can dump strategically. Real estate in major Western cities is exposed because foreign buyers, particularly Chinese buyers, have been artificially inflating prices. When China triggers Stage 4 economic warfare, these assets don't simply correct or adjust to new market conditions. They crash catastrophically because the fundamental assumptions underlying their valuations become instantly invalid. Third, position strategically in assets and sectors that benefit from economic separation, supply chain breakdown, or dollar decline in international usage. Defense contractors will explode in value when geopolitical conflict emerges, and countries scramble to build military capabilities. Domestic manufacturing companies will benefit enormously from reshoring initiatives and supply chain localization efforts. Energy independence becomes critically important when international supply chains break down, creating massive opportunities for domestic energy producers. Food security and agricultural self-sufficiency become strategic priorities rather than economic luxuries. Gold and other hard assets serve as stores of value when currencies fail and financial systems become unreliable. Fourth, diversify systematically away from pure dollar exposure, but do this strategically rather than through panic selling that destroys your wealth unnecessarily. Gold represents the ultimate crisis hedge that has maintained value through every major economic collapse in human history. Bitcoin and other decentralized digital assets offer alternatives to government-controlled currency systems. Foreign currencies from neutral countries that aren't involved in the China-America conflict can provide protection from dollar devaluation. Swiss francs, Singapore dollars, and similar currencies from countries with strong financial institutions and political stability. Consider assets and investments located outside the American financial system entirely, reducing vulnerability to American market disruption. Fifth, prepare practically for supply chain disruptions, not just financially through investment repositioning. Stock up on medications for 3 to 6 months because pharmaceutical supply chains will be among the first casualties of economic warfare. Purchase electronics and technology products now because prices will spike dramatically when manufacturing stops. Identify and stockpile whatever critical supplies your life depends on, acquiring them before the crisis rather than competing for scarce resources during the collapse. These aren't predictions or speculation. This represents pattern recognition based on systematic analysis of historical precedent. Understanding what happens during Stage 4 economic warfare allows you to position before it becomes obvious to the general public, before the panic selling begins, before the crowd realizes what's happening. The insiders are already implementing these strategies. You can observe this in publicly available data. Central banks worldwide are diversifying their reserves away from dollars, buying gold at record rates, and reducing their dollar exposure systematically. Billionaire investors are quietly moving money offshore and shifting asset allocations toward crisis-resistant investments. Private equity firms are liquidating Chinese positions and reducing exposure to Chinese-dependent companies. Smart money managers are systematically leaving U.S. equities and buying protection through derivatives markets that will profit from major market disruption. They understand the pattern. They're acting on it. They're positioning for Stage 4 economic warfare. The question is whether you'll recognize the pattern and position accordingly, or whether you'll become another victim, another statistic, another person who ignored the mathematical certainty until it was too late to respond effectively. History is screaming the answer through 3 identical precedents. The data is showing the answer through Chinese repositioning and American vulnerability. The pattern is revealing the answer through systematic analysis of economic warfare preparation. China's $8 trillion move will collapse Western markets. Not might, not maybe, definitely will. The sequence is set, the stages are completed, the trigger mechanisms are ready, the countdown has begun. What you do in the next 12 months determines the next decade of your financial life. Position wisely, act decisively. Time is running out faster than most people realize.